So welcome to everybody to what is literally the last session of the conference on this stage. So that's good news for your weary ears that they've saved the best till last. In this session, we're going to be talking about how neobanks go wealth. I've got a panel of experts helping me navigate this fascinating development. So I'll just hand over to each one to give a brief introduction to themselves. Should we start at the far end, Rachel?
Sure. Hi, I'm Rachel Przybylski. I am CPO at Sigma AI. We specialize in data analytics and we use all kinds of AI, data science, machine learning techniques to deliver products to our client base. Before working at Sigma, I've worked in the retail broking environment. I've worked for hedge funds. So my experience kind of covers the entire trading life cycle and obviously a sort of technology enthusiast.
Brilliant. Thank you, Rachel. Stefan.
Hi guys, I'm Stefan. There's a lot of you here today. Thanks for showing up. So I'm 17 years in the fintech industry, based out of London, cross FX markets, insurtech and exchange. I moved to Armenia recently. We set up a fintech hub. We're onboarding banks, brokerages, payments, blockchain, the whole lot. And I'm here to cross connect both parts of the world, East and West, through Armenia. Thanks.
Brilliant. Thank you, Stefan. And Mush.
Hello, everyone. Mushegh Tovmasyan. I'm the chairman and founder of Zenus Bank. We're a US-based bank, and what we focus on is what's called infrastructure banking, which is providing the payment rails and embedded accounts for neobanks and regulated financial institutions around the world.
Brilliant. Thank you very much. And my name's Andy Russell, previously of Aviva and Wealthify. I'm now the CEO of Project Arnaud at 11FS, which is building out a neo private bank with the founders of people like Monzo and Starlin, Metal, Nutmeg. So this subject is very close to my heart, and I shall be taking copious notes for my pitch decks from these panel of brilliant experts. So, bit of context. I'll start off with the market. What do we know? Well, the wealth market in Europe is about 30 trillion pounds in size. It's the largest in the world outside the US. So expected to grow at about 5% per annum for the next 5-10 years. The UK within that is one of the largest. It represents about a third of Europe. Relatively stable regulatory environment. And it consists of a small number of technology providers and brokers supplying an array of institutional wealth managers, advisors, banks, and retail platforms. From a customer point of view, the wealth divide is generally widening in most European jurisdictions. The rich are using market experts to access investment markets and get richer, and the young are getting more engaged by technology with things like robos and trading platforms. So it's a relatively stable market, but one with expected upcoming major changes, such as AI. I'm sure you've been in every single conference today and that word's been mentioned, but particularly on how to automate a lot of the back-end architecture and how you interface with the customer. Market cycles, heightened valuations could potentially take years to unwind, and so new entrants coming into the market face uphill challenges. And then the big intergenerational wealth transfer, accelerating change from analog to digital. And the neobanks are coming. So, with that background, start with my first question. Mush, what do we know about what the neobanks are planning for wealth?
There's a lot going on, a lot of innovation going on in the neobank space, because essentially they're the front end of financial services. They're making it easier for customers in their own regions, cross-border, to basically access financial services. So usually they're the ones who are innovating, and they're bootstrapping their models with institutions who can kind of power the money movement and yield and investments behind the scenes. So, kind of common trends right now, obviously stable coins and crypto is a big thing, and under the new US administration it's become, it's accelerated the adoption massively. So there's improvements in efficiency and cost of speed, cost of cross-border, FX conversion.
Yep.
There's this whole decentralized, centralized type of things. There's new ways of farming return on your capital. So there's not just putting it in money market or buying bonds, but there's now kind of DeFi and investing in stable coins and crypto and so on and so forth. So we're seeing a lot of innovations from kind of all corners of the world. And basically what we're, where we kind of find ourselves is kind of quietly hiding behind their brand, powering their money movement between their clients, themselves, their vendors, their providers, and whatnot.
Good time to start a business in that space, really, isn't it?
Yeah, it is. It's exciting times, and it's growing rapidly.
Rachel, Stefan, anything to add to that?
Well, I mean, sorry, the original
The
question.
original question. So, what do we know about what the neobanks are planning? And
Well, I mean, I'm not from a neobank, so I was quite interested to hear the answer to that one. But I mean, we can talk. I mean, obviously, what we do at Sigma kind of applies across the board. So whether it's a neobank or a retail broker, like a lot of the firms here at the conference, we really find that the trend is just around that democratization of trading and investing, right? And so what we're trying to do is bring those data insights to firms so that they can engage their clients more broadly. So, I think, this conversation for me is like super interesting. It's been around for a long time. Back when I worked at Saxo, the strap line was always like democratization of trading. And now we're talking about the same thing in wealth. And it's just been crazy watching, the proliferation of like online wealth management platforms and neobanks. And I think, one of the interesting things we'll probably get to is like that kind of cross-jurisdictional, like how the different neobanks are like competing. So probably Mush has got something to say about that.
Yeah, we will get to that. I guess, Stefan, what do we think? Why do we think the neobanks are moving into wealth?
Okay, sure. So I think neobanks going into wealth, there are a couple of reasons that I can see. It could be regulatory, could be strategic decision, right? So could be chasing profit growth, could be going after the AUM game. What I mean by that is, so the neobanking market is forecast to be $2 trillion market by 2030. The wealth management industry is about a 3 trillion opportunity by 2030, and forecast AUM growth 200 trillion by 2030. So you understand that if you look at a CFD or a spread bet broker or forex broker or a neobank that's just in payments in 3 or 5 countries, they're still limited, right? So if you want to grow and it's about product, jurisdiction, regs, and definitely I think going into the AUM game, yeah. I mean, if you just look at Nubank, Revolut, Chime, I wrote a few here, Monzo, N26 Starling, Varo Bank, Nutmeg, they've all sort of gone in different directions, different times.
Yep.
And yeah, I think the neo banking market is super interesting. It's growing at 45% CAGR. And it's a two-way thing. We're seeing different things happening in different parts of the world. Traditional banks going digital, digital banks going into traditional markets. And also you're seeing the TradFi and the DeFi world meeting through the wallet. So I think there's a lot more coming from the wallet side of things.
Yeah, completely agree with all of those things. Some of the stats from kind of the pitch decks that we're working on is just to add to those is just under 2/3 of millionaires believe their digital offering needs improving. So whilst there's a lot of wealth out there and a lot of providers, there's a lot of underserved people as well. Less than a quarter believe that what they invest in aligns with their values and their passions. That's because the manual processes around providing that support and advice is costly. And so to keep the overall cost low, homogenized funds are generally used. And so people are starting to explore some of the kind of peripheral sides of investing and into trading. And then probably the most interesting for me is 90% of beneficiaries change wealth managers post-inheritance. So there is a lot of trust and there's a lot of brand in wealth management. But actually, as the intergenerational wealth transfers occurs, what we're seeing is the next generation of customers are looking for new solutions. Certainly, that's what we're telling my investors anyway. So onto I guess the infrastructure behind that. So there's various reasons which we've all talked around why this is happening. But what do we think it's going to look like? So Rachel, what do we think the neobanks wealth offerings are going to look like, and like how will it differentiate itself from what's already there?
Yeah, I mean, and this is where I think, going back to the conversation about the generations, like young people coming into trading and investing now, they do things differently to the way that older generations might have. They expect to have information when they want it. They want it to be relevant, timely. They want it to be personalized to them. So where we work is in that space, helping providers up, talk about the innovations that they can provide and helping them get there. So, working on that roadmap with them to put that functionality into their platforms. Time is of the essence for a lot of firms, so they want to do this stuff like sooner rather than later. And if they don't have massive tech teams that can work on data science projects, then that's usually where we come in and help them put that functionality into the system, because that is what the younger generations are crying out for, is they want to make their own decisions about how they invest their money, and they want the data, and they want to see what's going on in the news, and we bring all of those data points together and surface it in those kind of insights that it engages their clients and brings them onto the platform.
Cool. Any other thoughts, guys?
Can you repeat the question?
Yeah. So what do we think that the neobanks propositions will look like, and how will it differentiate itself?
So I think this links to the next question you had for me about infrastructure. I think you mentioned
Yep.
infrastructure. So definitely a lot of business model changes going on across the spectrum, financial services, non-financial services. So going into each other's businesses and expanding and cross-connecting. So what I mean by that is just a few observations that I'm seeing. So like the payment wallet is expanding into digital banking services. Just look at Revolut and even into telco. Telco going into neobanking, we're definitely seeing that. We just onboarded at FinTech Armenia a big European telco data eSIM company, and they're coming to Armenia to hire talent and to build a FinTech product roadmap to plug into their infrastructure and become one big global FinTech company across all financial services and data telco segments. So that's an interesting change. The other one we're seeing is an opportunity for brokers. So we're at Finance Magnates London Summit. Historically, this summit was all about brokers. Now I think it's expanded into payments. Most remember 17 years ago when Michael started, we were at Alpari. This was about brokers, and now it's about payments. It's about we're seeing crypto here and all sorts of different fintech solution providers coming to this conference. But for the brokers here, I think neobanking is a big opportunity. Neobanking services across B2C and B2B segments, and you're definitely seeing. I don't want to just look at CMC markets yesterday, today, and look at where they're going next year and the next few years. I know Saxo went into asset management AUM game early. I don't know if it was a good or a bad idea to go into it so early. No comment. But different brokers are doing different things on the banking side at different times, and I think that it's still a very big opportunity for the brokerage market to transform and to go into the banking and neobanking space. There's a lot of room for growth. And then the last point I want to talk about is open finance and open banking. I think that is a big change. There's a couple tech companies in the room here that are building, they're going from technology, fintech solutions for brokers into full open finance, open banking technology solutions. So that's an interesting change from a structure perspective. But I would say that in the West, we're seeing a lot of that market structure, transition. In the CIS, a bit less, but it's coming slowly, and that's where we're positioning our brand and our platform for the changes ahead. And in Asia, I would say there's a little bit more, right? Some Asian countries are very advanced, and some are coming. So yeah.
Yeah, I mean, I think on that point, when you talk about people moving from one model to another, like the key here is going to be how quickly they can do it, right? If their tech stack is really legacy, they're going to be really behind others who are maybe starting from fresh. So when we say about like the neobanks, they're obviously going to be in a good place if they're building like AI native platforms or just like the new technology, because they can move that much quicker. So for me, it's interesting to see like who wins that race.
Yeah, I think the difference that the different ways people are approaching it is interesting as well. So you've got, for example, Monzo, who's partnering with Sekel. We know that they're effectively plugging in an investment architecture and all the partners behind it that support Sekel, which is one route. I know that Monzo are kind of looking at the kind of mass affluent robo challenger based market, but then you've got like Revolut on the other hand, who have a lot of proprietary tech in there, and so are going to be talking to lots of the people that you've just mentioned, Stefan. And I know from what we're looking at setting up, we're talking to banking as a service providers, wealth as a service providers, payment providers, advisor platforms. We've got a list of about 20 different types of providers to talk to, never mind the actual providers underneath them. So it is fascinating to understand how kind of broad a picture and how many partners you have to get right in that ecosystem in the first place to be able to provide a decent offering.
If I can add to that, it's pretty much like super app arms race. Because just to expand on what you were saying is kind of historically in this early days of neobanks, they were specialized. Robinhood, Revolut targeted the FX fees. Others targeted card product, others targeted trading, others targeted. So now essentially we're just exactly what you said. We have payments companies trying to add investments companies trying to add payments, crypto companies trying to add neobanking, essentially money movement and things like that. And the interesting kind of aspect, whether what Rachel said, the opportunity, or kind of, because essentially it's a race, whether they're native in one vertical and license embed the other things, or they focus on the utility they provide because they have kind of a niche or an access to a certain audience or a certain geographical location, or a subset, because maybe they own like telecom or something. They already have a captive user base and they're trying to cross sell to them. So I think whereas before, I think especially valuation wise, it was seen almost like proprietary IP. This is my platform and that's where the value is. Now it's almost, it seems that the technology is really more of like secondary, where it's the utility that they bring, whether it's using their own tech or licensed tech or something else. But the end game is, how can I grow fast? How can I eat somebody else's market share? How can I create market share out of a business that didn't exist in their space or in their geography?
A really good insight. So how do you think that's going to impact on the market participants, Sam?
Well, I mean, I think it's like everyone's converging. They're shopping around, they're kind of adding each other's strengths. So, kind of like I said, if you're a native crypto player and you don't specialize in something else, you go and find a partner either to acquire or embed their product, or essentially create a front end that will combine the various things. Because building from scratch and trying to become a leader in that space that you're not native to, the time it takes to get there, the opportunity may miss you. So I think what I'm seeing right now is a lot of collaboration between lenders, traders, wallet providers, banks, FX providers, custodians, and pretty much everything under the sun in what's labeled FinTech.
I think it's also interesting to see how the various parts of the wealth spectrum are approaching it differently as well. So you've kind of got the entry level robos, your Monzos, mass affluent, that are kind of almost approaching it as an add-on. It's a product, a propositional add-on. We do banking. Would you like also some investments as well? So trying to capture more share of wallet. I guess at the top end, you've kind of got the family office, and this is, I guess, more around the efficiency of the architecture that you provide to the people in the family office to give them as much information as possible to manage it for that family, and to put everything in one place, make it efficient and as cost efficient as possible, whilst providing the right services. I guess there's a bit in the middle that's probably been too expensive for mass production technology, around the kind of IFA private banking space that's kind of yet to be disrupted, but is clearly going to be disrupted in the coming years. We know that's where Revolut's that they're employing a number of wealth managers to try and attack that private banking space. We've got three very different models there. How do you think that's going to play out? Who wants to take that one?
Well, I think going back to how I started, like the high net worths of the future are young now and maybe don't have that kind of money to start with. So it's about, taking them on that journey. So if you can make your product sticky and that you offer enough services, obviously you're going to hope that you take that person all the way through that journey. I mean, I don't know what the stats are on how many people actually stay with the same sort of platform and provider through their lifetime, but I think that's an interesting thing, is like people, it is about trust, right, at the end of the day. So they want to trust the data, they want to trust the service, they don't want to be overcharged. So I think it's going to be, if you're savvy about investment from a younger age, I think you're probably going to be a little bit more demanding about what service you're getting, whereas before it was just like, oh, I just don't know what I'm doing, therefore you kind of needed to be guided. Whereas I think you're going to have to, it's a harder sell is what I think I'm saying.
If I may add, I think what's happening is tech has become much more modular. So the tech stack of financial institutions now is modular. And because the clientele, I guess, whether it's generational or because they have access to more information, the attention span is much less.
Yeah.
So I guess there's less loyalty to a brand, less loyalty to kind of, an institution or something like that. So the neobanks, or I guess the providers, are racing to find what's the best AI solution, what's the best onboarding solution, what's the best, I don't know, UI platform. How can I kind of go through the different stages of reaching revenue capture?
Another market participant we haven't touched on yet are the regulators. How do we think the regulators are going to keep up with this?
I've worked in regulation for a lot of my career. So I implemented MiFID 1 and MiFID 2 at Saxo and any other retail regulation that came along at the time. So, I mean, regulation's not going anywhere, obviously. But when you talk about AI, obviously we're seeing like the EU AI Act, and we had like MiCA in crypto. But I think most of the regulation that came before already covers a lot of ground. And actually, if it's been written as well as we hoped, we shouldn't need tons of new regulation just to cover AI or the market shifting. So for me, I hope that we don't have like another huge piece of regulation like another MiFID, for example. But I do think that people need to be mindful of how they put the right governance processes in place, because being proactive is always the best way. And all of the work I've done with regulators in the past is they want to see the industry driving the right way forward. So if you are modeling good behavior from the start, that generally tends to be the best way forwards. But obviously the regulation is going to be across so many areas. So I think you touched on it at the beginning, Steph.
Yeah, just a comment. So I think the sandbox is coming back. You saw maybe the FCA chief a few days ago on LinkedIn. I saw a post around sandbox environment for UK stablecoin. So that's a good one to watch, I think, and big news. UK needs it. Actually, in Armenia, with our central bank, we have a working group, FinTech Armenia, for Sandbox, where we are actively working with the regulator and the central bank to open up slowly regulation in that part of the world, ex-CIS Eurasian markets, with this type of London sandbox, Singapore sandbox model. So I think that's very important to keep watching, listening, learning, and then to slowly open up regs for new models to come.
And I touched on earlier on around the fact that there's maybe a bit of an age divide between investing and trading. What do we think the future looks like with regards to serving the next generation, wealth and wealth management? Does it look more investment? Does it look more trading? Is there something else we need to be thinking around?
That's a really good question. I think I feel like they want to do it all, the younger generation. They want everything.
Back to your super app, isn't it?
It is. So I think that's why you need the right level of services, so that they know kind of what things to do from a young age to start investing earlier, so that their pensions can be the right size when they're older. But they also want to have a play around, and they are more interested in the markets and what's going on. And I think, again, jurisdictionally, this probably changes, but all the conversations right now about the state of retail in the UK, and how do we make sure we get more listings back in the UK, so we can have people buying UK listed entities. So I mean, I think there's definitely an interest to keep the retail trading element there. So
just a comment. So I think I'm nearly 40, but if I look at the last 20 years, I was more of a trader. And I've learned from my dad to be more of an investor as you get older. It's like you're going to start drinking whiskey, you're going to invest, you're going to trade less. It's different, right? These things happen. So that's one comment. And then the other comment I would say is crypto is broad on the pie. So crypto, I think, has massively lowered the age and the barrier to access into capital markets and products through crypto. And I think that is one to watch, because suddenly a much younger demographic is entering markets, trading, investing, and high risk, low risk, and actually high risk crypto, right? So that is, I think, an interesting shift that we need to think about properly as an industry.
I do like the idea of a correlation coefficient between whiskey drinking and traveling from and trading to investing. I think we should investigate that. Well, I think we've maybe touched on to the future, so let's start looking a bit more forward now. So, Stefan, do you think that neobanks will be successful in entering the wealth market?
Yes. So what does that mean? That means like Nubank, Revolut, Chime, N26, Monzo, Starling being successful at wealth management? That's the question. I think yes. I think they have scale. Some of these neobanks have scale in terms of database. I think it depends who they're hitting, right? So if they're hitting dad in his 70s and 80s, then that's not going to happen as easily and quickly. If that's where a chunk of the AUM is sitting in the older demographic.
Yep.
But I think in the middle-aged demographic, like Mush, me, where there's growth in potential like wealth, AUM, definitely, because we're, the users of those digital tools and those, maybe, I'm not sure about Mush, but I think so. I'm a user of neobanking products and services. And so over time, I think as these neobanks grip more users around the world and the trust grows and the product offering broadens, there will be a switch. And that's why the banks got to wake up and got to move quickly to strengthen their tech and their customer centricity and the digital side of their offering, as we know.
Mush, anything to add?
Well, we have like a nice look because our business model, we service regulated institutions across the world. So, we have, I think, close to 700 institutions in, most geographies and most countries around the world. So we kind of see trends come and go and, kind of we notice what's growing in one part of the world and, and not in the other one. And I don't know what's the right or wrong answer, but I've seen essentially there's one line of thought that says pick one thing and do it better than others and you will grow. And I think that's definitely working for many big players and many startups, that kind of try to solve one problem and grow. And then there's the other side where it's basically throw a big net and see what you can catch. And I think we already saw one of those, especially in wealth, one of those bubbles grow up and pop already, which is this DeFi yield farming. It basically the last year or two, that was like a big thing where, kind of in a zero-sum game, suddenly everyone seemingly is winning and earning crazy yields. And everybody went after that. And, now we're seeing kind of, how that just the math doesn't add up. So I don't know. It's, I think it's worth trying. And, each geography is different, mainly driven by the regulations and access to markets and access to, kind of a democratized cost layer of moving money. But I don't know what the answer is, whether, you need to be the best at one thing or try to do as many things as possible to catch.
I think I agree. Most startups have generally been good at focusing on one thing. I think that kind of contradicts the super app concept, but I think that is kind of what we're moving towards at the same time. So we've kind of got this difficult position of having to try and either start up or challenge incumbents whilst being good at everything. So it'd be interesting to see how that develops. I guess, where do we think it would be most successful? So which jurisdictions do we think it's most likely to be successful in?
I mean, you either chase the number game of how many clients you're servicing, and even if you're capturing if the average transaction or balance size is, I don't know, I think there's a lot of interesting stats on neobanks from Europe where they cover a lot of clients, but the AUM is, I mean, the average balance or the revenue per account is very small.
Yeah.
Versus others that are in like large markets like parts of Asia, India, Brazil and things like that, where there's like a massive market. So if you solve a problem, you basically just get them all. So it's different. Open banking in Europe makes it very difficult to compete because everyone's competing against everyone.
Yeah.
Whereas in jurisdictions where licensing is difficult, UAE, certain parts of Middle East, is whoever gets the license, kind of gets first dips at the market. And we've seen this happen in Brazil, in Mexico, in UAE, now in Saudi Arabia.
Yep, all good points. Rachel, what does the market look like in 5 years' time? Finish us off.
Well, I mean, from a technology perspective, because that's obviously why I'm here. I think, we'll see that kind of shift towards technology being used in all of the kind of, for operational processing efficiencies. Everyone knows that that's kind of like the first areas that they want to invest their money into, making those processes easier. Onboarding clients, for example, anything to do with like managing regulation. For the last 10 years, we've obviously just seen so much money go out of organizations in just trying to cope with the regulations. But now I think people are moving towards, okay, how do I use AI? How do I use other new technologies to either lower costs or to generate revenues? So I think when people like get past the operational efficiency models, then they'll start moving into like, how do we generate more revenue from our clients using new tools? Obviously, it's a bit circular, because the minute you try and build something that is sort of trading investment related, you have to be careful about the governance of it, and whether you're like giving your clients advice. Now, obviously, as a technology firm, we don't worry about that, but our clients do, and I have a lot of sympathy for it. So I feel like, how they build the technology from the ground up, making sure that they really understand their client base as well, because you could spend a lot of money right now building new technology, but not keep your finger on the pulse of what your clients actually want and the way that they want that technology delivered. So I think, really in 5 years, I think we'll see a massive difference in the uptake in the new technology, and people won't be quite so scared by it, and they'll have figured out how to implement those solutions.
Awesome. Thank you very much, panel. That concludes with just 20 seconds over, which I don't think is too bad timekeeping. I think in summary, got some questions.
Thank you. I have two questions. I think one probably from the representative of Zenus, and for Rachel. I'll try and be as quick as I can. At the beginning, you spoke about fiat crypto type investments, high net worth individuals. The institutions that I'm dealing with, they don't call themselves neobanks, they call themselves challenger banks, and it's a challenge. And the challenge is, and how do you respond to this? The people that really have big bucks, liquid 2, 3, 4 million in whatever currency, the fact is, they will put their money into those institutions that are safe and secure. They err on the side of caution. They're very conservative. Crypto to them is a complete anathema. They will only go into fiat. So the challenge for the industry is crypto in the custodial world, in a centralized exchange, which is part of under the FCA, so to speak, as opposed to the decentralized world. But even in a stable coin environment, the feedback I'm getting is they won't touch it. So there is a challenge for the industry, and there is a challenge for the regulator and the government to have some form of education for those people who are prepared, forget the decentralized bit, to move into the centralized exchange in the crypto, in the stable coin world. It's not happening, your comment. And if I may very politely move very, very quickly to your colleague at the end, I can tell you this in the politest way I can, so I hope you won't take it the wrong way.
Sure.
Decentralized. I'm heavily involved in this, very, very heavily involved. My question is very simple. In the decentralized world, decentralized exchange, you can't see it. You can't see it. Non-custodial, it's blockchain. You can't see it. It's bulletproof. Question. You don't think there'll be a MiFID 3? I think there'll be a MiFID.
There might
Well,
be.
if I may finish, how are you, not you personally, how is the regulator, how's the government, how's the central bank? And I had this discussion with a central bank. It doesn't matter who, because they didn't have an answer, because they don't know. So I ask you, how is the regulator, et cetera, going to oversee an environment which they cannot see? They cannot see. They have no control over. Dare I use Thatcher, those who remember her?
Yep.
She said, if you don't have control over your currency, you have no control over your economy. So two questions. I'm sorry, long, but I think very important.
I think the regulators are...
Zenus as well. Don't
Yeah.
forget my question.
The regulators are doing as much as they can. I think they're probably, like I said earlier, they're trying to work with the industry. I don't really know the answer to your question on where it's going to go, but they're very heavily involved, and they're learning all the time. So they're on the journey with everybody else. And, sometimes regulation comes in too early, sometimes it comes in too late. So I'm not sure there's really a right or wrong answer. They'll they'll go with the market, they'll learn as much as they can. They're very good at employing like SMEs in this space. So obviously it's newer, but they will be bringing in people who understand that market. Also, the infrastructure is still changing there. So I think there's probably a bit of time before we figure out what they do. But I don't know if you've got, it depends where you are as well, jurisdictionally.
It's a loaded question directed at me, so I'll answer. I think we're the last panel, so we'll probably have to answer. So the first part that you asked is, I think it's a massive generational shift. I know very, very wealthy, younger clients, friends of mine, that will not touch a piece of paper. All they care is like, connect my wallet. I don't need contracts. I don't need security. I don't need to know where you're based, who owns it, or anything. Plug in my thing and I'll trade. I'll come when I please. I go when I please. And this user-based exists. It's real. Whether the regulators, the providers like it or not, this is real. I mean, we're talking not 2-3 million. We're talking tens or hundreds of millions. And they just won't bother with the traditional onboarding and, kind of the speed bump approach. On the other hand, there's the, kind of, whether it's the old generation or kind of, more mature kind of client base, they want to trust, where are you regulated? What's your capital base? What's your experience? What's your, safety net and things like that. So there you just need to adapt. I think times are changing and wealth is transferring to new generations. New wealth is being created. So you either play in both fields or you play in one and you kind of skip the other one. So that there's no, I don't know, right or wrong. And the other side of things, it seems what I completely agree, kind of blockchain, there's a whole journey that's kind of untouchable in a way, neither by providers nor regulators. And that's a challenge. What I see happening, at least in the US and some of the providers, there were stable coins, but now there are deposit tokens. Deposit tokens are essentially, Federal Reserve money, bank money in a new format. It's like the new generation of certified checks, where you're not trusting the person who gave you the check, but it's backed by institution and so on and so forth. So what the regulators and these institutions are trying to do is essentially police the on-ramp and off-ramp. Right. So to be able to get on that token, you need to be able to pass traditional KYC, AML, source of funds, all these things. Once your money is on the exchange, you can carry it on a USB drive, you can pass it on and things like that. But for somebody to actually spend this money, again, they need to be checked by the traditional regulated institutions, which will fall under oversight and so on, to be able to make use of that money. But where you keep it, non-custodial on the cloud, buried behind your back, things like that. I think it's okay. And I think basically regulators don't have a choice because it's tech. I mean, it's, it's out of their hands. So.
Yeah, I agree. Change is coming. I think there's a difference in generation. We could have an entire session on regulation of non-fiat currency, but I'm afraid we're out of time. So thank you, everybody, for listening to us today, and hope you enjoyed the conference.
Thank you.
Thank you.